Hey traders, it's John Fortune here of this week's weekly Forex Forecast. I hope you're having a great weekend. Let's kick off with the DXY as we always do. In last week's weekly Forex Forecast video, I highlighted the fact I was looking for a rally into the 93.42, and this correction or this pullback in the DXY should be viewed as correction for further advances to the upside last week. We did take out the target at the 93.42. This was a nice move in the DXY last week. Now, last week was an interesting week because alongside this rally in the DXY, we also had a clear flight to safety in the Japanese yen, in the Swiss franc, as we're going to see when we go through this video. And this could be an early warning sign for the stock market. We may start to see a correction and start to see the stock market pulling back. And when we look at stocks later in the video, you will also see we're going to look at the Russell, which is more sensitive to the business cycle than a number of the other stock indices. And that also, alongside the moves we saw last week in the currency markets, may be pointing to a near-term correction and offering up some warning signs of stocks going into next week. So very simply put, going into next week in terms of the DXY, any correction in this market, we're quite close to the target. So to get good risk to reward setups in DXY pairs, what I would like to see is any deeper correction in this market to next week is once again going to be viewed as an opportunity to start to look for bullish breakouts up towards the next key resistance, the upside and the target set at the 93.76. And if we break through here, we're going to be looking up towards target 2 at the 94.150. Now, what this means is going into next week, I do once again favor dollar strength positions. And as I said before, it's not just dollar strength positions, it's risk off setups, which will include Japanese yen strength setups and also Swiss franc strength setups going into next week as well. So in short, I go into next week with a bullish bias on the DXY and also other risk off currencies next week. Next is EurUsd. Now, last week in euro dollar, I highlighted the fact that this pullback here was viewed as a near-term correction for a decline to the downside. We took out the target at the 1.170050, so a really nice move in euro dollar to the downside last week. Going into this week, I am once again bearish on this market, and any pullback in this market is going to be viewed once again as an opportunity to look for bearish reversals down to the next key support to the downside and the target set at the 1.1651. Next is Aussie dollar. Now, I have recently been trying to impress on you guys that the Australian dollar and the Canadian dollar are the two currencies you should be focused on looking for those short setups. And after a couple of weeks of moving sideways, we did finally have big sell-offs to the downside in Aussie dollar. And we also saw the Canadian dollar collapse in last week as well after a couple of weeks of moving sideways. So we had really nice moves in these markets. In Aussie dollar, we took out both targets to the downside and we made our way all the way towards the third target here, which we stopped just short of. Very simply put, going into this week, I am still bearish on this market and looking for short opportunities once again. Any correction in this market will be viewed once again as an opportunity to look for bearish reversals. Just bear in mind, because we had such a strong sell-off, sometimes you can get deeper corrections for a week or so. So patience may be required, but any pullback in this market once again is simply viewed as another opportunity to look for bearish reversals and bearish breakouts in this market down towards the next key support to the downside, the target set at the 0.7096. Now, because we're very close, we may come down and take out this target first and then correct. If that's the case, we'll be looking down towards target 2 at the 0.70380. Next is New Zealand dollar. Now, New Zealand dollar was left out of last week's weekly Forex Forecast video because relative to a number of the other currencies, it had been strengthening recently, and this was in the run-up to the interest rate decision out of New Zealand last week, where the RBNZ were expected to raise interest rates by 0.25 basis points from 0.25 to 50 basis points, 0.50. And on anticipation of this, the New Zealand dollar was actually holding quite firm relative to a number of the other currencies, which I preferred to look to short instead, like the Aussie, like the Canadian dollar. Last week, the RBNZ failed to raise interest rates and actually held at 0.25% basis points. And as a result, we saw this decline to the downside. And alongside a stronger dollar, this sets up New Zealand pairs and New Zealand dollar especially for further moves to the downside next week. And I really think these are markets to keep an eye on going into next week. So in terms of New Zealand dollar, we are very close to the target now. Any pullback in this area gives us the opportunity to look for those risk reward setups. down towards the next key of support to the downside and the target set at 0.6802. And similar to the other charts we've looked at, if we bounce and take out this target first and then correct, we'll be looking down towards target 2 in this market at 0.6725. Next is pound dollar. Now last week we were looking for a sell-off to the downside in this market, and we took out both targets and then some. We had a really big sell-off in pound dollar last week. Going into this week, I am focused on pound dollar to the downside once again, and I do prefer shorts in this market. Any pullback is going to simply be viewed once again as an opportunity to look for bearish reversals down to the next key of support to the downside, the target set at the 1.3479. Next is crude oil. Now, in previous weekly Forex Forecast videos, I highlighted the fact that crude oil was selling off to the downside and that the Canadian dollar had yet to catch up with this sell-off. We did highlight this move to the downside. Also, this move to the downside was highlighted previously to look for shorts in this area. And last week, we had a pullback and again, a really nice sell-off to the downside, taking out the first target and almost taking out the second target at the 61.39. Very simply put, going into next week, I am once again still looking for short setups in crude oil. Any pullback in this market will be viewed as another opportunity to look for bearish reversals and bearish setups down towards the next key of support to the downside of the target set at the 61.39. And because we're very close again, if we take out this target first and bounce, I'm going to be looking down towards the second target to the downside here at the 57.25. Next is US dollar CAD. Now, with a stronger dollar and a weaker crude oil, US dollar CAD to the upside is something we've been looking at. And in last week's weekly Forex Forecast video, I highlighted US dollar CAD as one to watch to the upside. Why? Because not only had we not yet caught up with that dynamic of a stronger dollar and a weaker crude oil in US dollar CAD, we're just been correcting. Last week, we also formed this inverse head and shoulders. That is a bullish reversal pattern. And once this pattern broke last week, we saw that major rally in US dollar CAD to the upside, taking out both targets in this case. Very simply put, going into this week, I am still bullish on US dollar CAD. For anybody not involved from last week, what we need to see is we need to start to see a pullback. And very similar to what we looked at in Aussie dollar, because we have such a steep move here, it may be the case that we get a deeper pullback and the market corrects for a week or so. So patience may be required in this market as well. But any pullback in this market, once again, is going to be viewed as an opportunity to start to look for bullish entries once again, up towards the next key of resistance, the upside and the target set at the 1.2972. The next CAD pair I like is CAD franc. CAD franc is a market in previous weekly Forex Forecast, although not last week, that we've been highlighting for a move to the downside. We had a really big sell-off, just as we saw in US dollar CAD to the upside, CAD yen to the downside, as the Canadian dollar finally rolled over, catching up with that decline in crude oil pricing. And as a result, going into this week, this is also another good market to keep an eye on. Any pullback in this market, we've already started to pull back, so any deeper correction is simply going to be viewed as an opportunity, as a correction, and an opportunity to start to look for bearish reversals once again, down to the next key of support to the downside and the target set at the 0.7061. And the final CAD pair I like this week is CAD yen. Now, in last week's video, I highlighted the fact that CAD yen actually broke higher and it broke above the line in the sand and started to reverse back down below it. And despite this break higher, I noted that CAD yen was still bearish. We should still be looking for short positions. I had a couple of short positions in this market last week. And this did turn out to be a false breakout as Canadian dollar, vis-a-vis not just the Japanese yen, but also the US dollar, the Swiss franc, etc., did catch up with the sell-off recently in crude oil, and we had a fantastic move to the downside, taking out both targets in this market. Very simply put, going into this week, I'm once again looking for short setups in this market. Any pullback, and the deeper the better, as always, any pullback is simply going to be viewed as a near-term correction and an opportunity to look for bearish reversals down to the next key of support to the downside and the target set at the 83.61. If you want to be more conservative, you can look at previous lows, but the 83.61 is the next key area of support to the downside. Next is Aussie yen. Now, this is also a market I've been highlighting for short positions. It was another market I had short last week up from this area, And this is because the Aussie and the CAD, as I previously noted, were two of the weakest currencies, and vis-a-vis the risk-off currencies were likely to sell off the hardest. We had a huge sell-off in the Australian dollar as well, alongside the Canadian dollar, which we saw last week, and we took out both targets and then some. This was a huge move in Aussie yen last week. Very simply put, any pullback this week in this market is viewed once again as an opportunity to look for bearish reversals, and with such a big sell-off, as I said earlier in the video, it may take a little bit of time to correct, but any correction is still viewed as an opportunity to just simply look for bearish entries down to NzdChf supports to the downside and the target set, and 77.57. And the final yen pair I like going into next week is New Zealand Japanese yen. Now, we highlighted earlier in the video how the RBNZ failed to raise interest rates last week. This saw the New Zealand dollar rolling over, breaking out of the near-term correction that a lot of the New Zealand pairs had been in. And as a result, especially paired against the risk-off currencies going into next week, I really do like New Zealand shorts. So going into next week, any pullback in this market is simply viewed as an opportunity to start to look for bearish reversals down to the next NzdChf supports the downside, the target set, at 73.79. The next Forex pair I like is Aussie franc. Now, bear in mind, all of the currencies we've looked at so far, look at these big risk-off deflationary type moves we've seen in these currencies. They are all uniformed in a way, and in fact, going into next week, there's going to be plenty of opportunities. The key, if you're trading the Forex markets, will be not to overtrade, not to take too much risk, because all of the markets here are setting up very nicely. But going into next week, any pullback in this market is simply going to be viewed once again as an opportunity to look for short positions in Aussie franc. I'm going to be looking down towards the next NzdChf supports to the downside and the target set at 0.6507. And if we break through here, or if we bounce from this target, because we are very close before correcting, I'm going to be looking down towards target 2 at 0.6455. And the final Forex market I like before moving on to stocks going into next week is the New Zealand Swiss franc. Again, the same as the other New Zealand pairs, we saw New Zealand rolling over to the downside with that failure to raise interest rates as anticipated last week by the Central Bank of New Zealand. And so very simply put, going into this week, any pullback in this market will be viewed as a great opportunity to start to look for bearish setups in New Zealand franc down to the next NzdChf supports the downside and the target set at 0.6233. And because we're very close here, once again, for some reason, we're very, very close to the targets in a number of these markets. But if we take out this target first and then start to bounce, we're going to be looking down towards target 2 at 0.6140. Next is the SPX. Now, I've previously been bullish on stocks and on the SPX, and if we look at this chart, it is not technically bearish just yet. However, something interesting to note last week was we did come down and we took out this low, tested this level, and we are in a position where we could be going one of two ways in the SPX, either continue to the upside or starting to form a right shoulder, and this kind of setup tends to occur once you break previous lows over in this area like this. So what's interesting is, with this setup going into next week and with stocks and the SPX as they currently stand, although the stock market is not yet technically bearish, what we're looking at in the flight to safety, the risk-off moves in the currency markets, also seeing commodities coming down. We saw crude oil coming down, which is in and of itself deflationary. We have to ask the question going into next week, are we going to see a break lower in stocks, and are we going to start to see a correction in the stock market? If we're going to get that, the correction will likely gather pace below a break of this low. We come down below the line in the sand at the 437.237, and a break of this low would likely trigger some stop losses, and that's where you would see some capitulation if we were going to get a correction. Now, alongside the risk-off moves in the currency markets, the reduction in the prices of commodities like crude oil, like copper, another warning sign for stocks going into next week is the Russell. Now, the Russell as an index is more sensitive to the business cycle, as it's mainly made up of small cap stocks, and the smaller businesses tend to be more sensitive to the business cycle. And as a result, it can in and of itself lead other indices. So if we look back, for example, at the peak of the SPX on the 19th of February 2020, as the SPX was making new highs on the 19th of February, what was the Russell doing? It was making a lower high. It was forming a right shoulder. And if we go and have a look at the Russell now, it also looks to have made a lower high and to be coming down from here. So when you combine what we're seeing in the currency markets, in the commodity markets, and also here in the Russell, you have to ask the question, are we going to see a correction near term in the stock market, in the SPX and the other indices? Well, depending on how you're trading stocks, if you are long only, it may be a good time to seek some protection, some hedging into your portfolio. And if you're somebody who likes to just trade the dips or buy the dips to the upside in the indices with naked positions, although it does carry a lot of risk with it, then it may be the case that next week you just sit those markets out and you wait and see what transpires next week before starting to buy any more dips or going long in the stock market. So again, to summarize, what I'm saying here is the stock market itself should be viewed essentially as being neutral, could go either way, but there are warning signs from the currency markets, from the commodities, and possibly the Russell, which we just looked at, that we may be getting a near-term correction in stocks. So I'm not suggesting to go out and short stocks next week. And again, depending on how you trade the stock market will depend on how you utilize that information going into next week. Next is the Nasdaq. Now I also go into next week with a neutral bias on the Nasdaq. I have been bullish all the way up and we've been grinding to the upside, but because of everything we've just discussed, there are warning signs in this market. The real risk of liquidation or a sell-off in this market would come on a breakdown below the low here, the line in the sand of the 1479189. If we start to break here, we could see stop losses being triggered. So whether you're trading these outright or as part of a portfolio, these are all things to consider going into next week. So the market itself is not yet bearish, it's still technically bullish, but my outlook is neutral because of everything we discussed in the SPX part of this video. Next is the Dow Jones, and again, have a neutral bias going into next week. On the Dow Jones, you can see the head and shoulders or potential head and shoulders, the developing head and shoulders is slightly more pronounced here with the breakdown below this low previously. And if we fail to actually make a new high here and then we break this low, that is where the head and shoulders will be confirmed. The break below the 34764.82 would be where there is a greater risk of liquidation and a sell-off which could initiate a correction in the stock market, and in this case in the Dow Jones. So in order for me to be bullish once again, what I would like to see in the stock market is I'd like to see a rally to new highs and preferably a break above previous highs with momentum. That would be good to set up dip buying, further advances to the upside in these markets. So going into next week, once again, there are warning signs for the stock markets. Patience and risk management is going to be something to consider going into next week. And the final stock market we're going to look at is the Nifty. Now, unlike the US indices we just looked at, the Nifty is actually technically structured to the upside. This is a bull flag setup. We're pulling back to test, stair step, previous highs over here. And this would be an area to start to look for further advances to the upside in the Nifty, up towards the next target set at the 16904.20. However, just bear in mind everything we discussed in the US indices, because if we do get a correction in US equities, this can spill over into the Nifty as well. Next is gold. Now, last week we discussed the flash crash we saw in gold to the downside. We were positioned for short positions before this flash crash, and this is what tends to happen. You tend to get flash crashes in the direction of the trend. They rarely happen in the other direction, which is why if you're following the trend or you're trading in line with the trend, you will not only avoid these kind of flash crashes, but most of the time you will be positioned in that direction. If you have a position, you will actually be able to ride those. In gold last week, we pretty much did nothing. And as a result, the same analysis remains as of last week. We started to roll over to the downside, and any correction in this market is still currently viewed as an opportunity to look for bearish reversals down to the next key of support to the downside and target set at the 1739.33. Next is silver. Now, we were also looking for short positions in silver, and we had the flash crash to the downside, and after this we just started to correct, very similar to gold because of how much momentum was in that flash crash. We really spent last week not doing too much. We did pull back, and this pullback was viewed last week, and you can see a mini head and shoulders here as an opportunity to start to look for bearish reversals. We're starting to make our way towards the target at the 22.60, so any pullback and any deeper correction next week will be viewed once again as an opportunity to look for bearish reversals down to the 22.60, and if we can break through here, we're going to be looking down towards target 2 at 21.90. Last but not least, we have Bitcoin. Now, Bitcoin has actually been a really good performing market since we introduced it into the weekly Forex forecast. We had the crash to the downside, which we saw. We had the reversal higher, and we've been taking out target after target. And we are now making our way towards the 52.911. So very simply put, you can see we have strong momentum to the upside. What I'd like to see is a bull flag type pattern. If we get a correction in this area, that would be the opportunity for anybody not involved from previous weekly forecast videos. Any correction here would be an opportunity to start to look for bullish reversals up towards the next key resistance, the upside and the target set at the 52.911. So that is it for me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.